Charlotte McLeod with investingnews.com, and here today with me is Fabi Lara, founder of The Next Big Rush. Thank you so much for being here.
Thank you for having me on. It's a pleasure.
Really good to be catching up with you after a little while. Really good to have you back. And we're here at VRIC. And you were on stage earlier today, I believe, talking about how to find companies that can go 10x. So I want to start with your presentation, and I know you can't go through the whole thing right now, of course, but key takeaways that you would want to leave investors with.
Right. So one of the themes that I see a lot this year is people coming up to me and asking for specific companies and basically stock tips, right? When you're starting off your investing activities, I guess, you want to just know what to invest in. And even though I think there's some use to that, I would recommend people actually pay for their, newsletter subscriptions and go to somebody who really does this as a full-time job and then pick out what they believe in. At the same time, I don't think it's the best approach. I think the best approach for somebody who's willing to come here or willing to watch these videos after the fact and learn is to figure out how to invest rather than what to invest in. Because the what will come easily to those people that put in a little bit of effort into figuring out, okay, what commodity am I interested in? Because if there's a really great company, but it's in, germanium, it's great. It's hot. It was hot a few months ago, but I know nothing about germanium, right? And so I don't have an edge. So everybody else that's investing in that germanium company probably has an advantage over me. How am I possibly going to make any profit with that? So I would like to invite people to take a step back and take a look at what commodities they like. And within that, what are the opportunities that they can find based on their personality? Are you willing to trade in and out very quickly? I can't do that. I always lose money. Are you going to specialize in discovery plays? Early stage exploration, or are you more of a buy and hold? So you want to buy pounds in the ground or, ounces in the ground and just sit and wait for the market to come to you, which is what I like to do because it's easier. You do a lot of work in the picking, but then you just sit and wait for a few years and eventually, hopefully, the price comes to you and then you exit. And so there are a lot of different ways to play this market and a lot of money to be made, for sure. But the way that I make money is not going to be the same way that the next person will make that profit. So yeah, it's just a little bit of thought that needs to go into it. And then when you have that thesis, you can walk these floors and just pick out what fits the thesis, not the other way around. Otherwise, you're going to be bound to just salesmanship.
Yeah, I think that's a great way to start this conversation and a great concept to bring to people here. I think, as you said, the sooner that people realize who they are as an investor, the sooner they can start to hopefully profit.
Yeah.
So, and I think this is a good segue into talking about where you have an interest, which is, of course, uranium. So I mentioned it's been a bit of a while since we last spoke. I wondered if we can start with a pretty broad question, just looking at where are we in the cycle right now for uranium?
I believe that where we are in the cycle of uranium is where we have seen kind of a dance of the fundamental thesis in the price of the equities. So the fundamental thesis was starting to get better, and then the equities actually followed that and kind of overshot it, right? So things got a little bit too hot, but we're talking, 2021, 2022. And so that has died down while the thesis has gotten better and better and better. And so there's this massive disconnect between what we know to be happening in uranium going forward, currently and going forward, and what is happening to the equities. And there are a few reasons for that. One of the reasons is that if the spot market of uranium isn't doing so well, then the equities aren't doing so well. Because a lot of the equities are extremely speculative. It's not big money buying it. It's people like you and me. Therefore, people look at the spot price because it's the exciting thing that goes up and down, and mostly it has been going sideways and down and nowhere. So with that, we have to understand what makes the price of an equity. And so if I want to buy some stock that's, Wyoming companies that have uranium pounds in the ground, then I have to think, okay, who are going to be the next few people to buy this off me so that the price is higher? And so sometimes it's the excitement of Trump coming, and cutting down red tape. It's the excitement of the price going up, et cetera, et cetera. So I think where we are in the cycle is that the excitement has died off to me, and put the thesis back into play in the sense that it's so quiet. Sentiment is down so much that it's kind of like, to me, it feels the calm before the storm, right? It's quiet and eerie, and the contracts are being signed at a higher price every single month, but the retail investor hasn't caught on. And so I think that people who haven't gotten into the thesis or are looking to come back to the thesis, I think this is a wonderful opportunity. I've never seen such a disconnect, and I'd like to, remind people that for this next wave of uranium, we might have a different dynamic, I would call it, because some of the potential buyers of uranium might be connected to data centers, which will power AI, and tech-based purchasers. I don't think they're going to be as cautious as energy companies. Energy companies, they need to create profit in order to pay their dividends, etc. They need to be sustainable, most of all. And tech companies just need to have as much power as possible, right? And every single week, I follow AI very closely. Every single week, there is a massive breakthrough in AI. Every time we see a breakthrough in AI, it means that people are going to use it more and more for everyday things, which means we're going to need more power, which means we're going to need more uranium. So all of this is kind of turning into something much bigger than we could all have predicted. So yeah, I think it has gone like this, and now we're in the little curve that is going to go up. That's my bet.
Yeah, and I think that was very well explained. I think the question that people will have when you say that is, okay, so in this calm before the storm period, what is the best way to get positioned if you aren't already? And I remember from previous conversations, you really like the very small companies. Is that still where you're focusing?
Yeah, I do like the small companies, but I don't think it's so much about their size. It's more about the disconnect between what they have in the ground and the size or the price that the market is giving them. So one of the things that I am really, really excited about is the USA, because you might be getting a little bit of excitement from a new administration, plus the fact that politically in the world right now, we're living in a time when, it's us versus somebody else. Whoever that somebody else is kind of doesn't matter as long as there's somebody else to go against. And with that, you want energy security, you want homemade production of pretty much anything that you can get. And I think the USA, has historically had such a powerful market or such a powerful, production profile that we know where all the uranium is in the U.S. It's been actually mined and not just figured out, not just delineated in different projects, but we know where those projects are, but they need to be brought to modern day geology, modern day means of accounting, and it needs to be basically okay with the regulators in Canada for us to be able to say, hey, we have 20 million pounds in this project. And right now, companies are working towards that. So I think it's kind of a no-brainer. Like, that uranium is there. It's not a bet if the uranium is there. It's just how much and at what grades. And I think that a lot of the U.S. projects are going to start surprising to the upside. So, and these companies are still very small. So one of them, and I talk a lot about it because I'm biased, my company half owns the project, but Myriad Uranium is a company that has found grade that we had no idea we had in the ground. And this is Wyoming, safe jurisdiction, US, nano cap, very, very small market cap. So I see that as a theme, a great opportunity. And unlike the Athabasca Basin, which is great if you hit it, right? But if you don't, then your price is going to languish. You already know what's there. As the people start joining this idea of uranium as a way of investing in AI and in the future of energy, I think that more and more Americans will want to invest in something that is local. And so That's my favorite theme within the thesis.
Yeah, I think that makes a lot of sense. And I want to talk a little bit more about the whole AI angle, because it seems like we had this very positive setup for uranium even before that entered into the discussion, and now it's here and it's just building on top of that. I thought it was really interesting what you're saying just now about the tech companies. Maybe they won't be quite so discriminatory as like a utility might be. So anything to add on AI and uranium?
Yeah, so one thing to understand is just that AI is not a popular chatbot. AI is a technology that if you stop and extrapolate what has happened in the last year or so into the future and realize that whatever you extrapolate is being surpassed. So if you plot it on a graph, everything that you believe is going to happen growth-wise in the AI space, and I'm speaking about the actual technology getting better and better, everything is going up like this. And what I'm not involved in this, but we as a species, the human species, predicted that would happen in the next year or so is probably going to take a few weeks. That is the latest, which means that instead of going out there, setting up a business and hiring 10 people, I can go into a website and set it up myself and create those, robots to do all the work of the 10 people. And in some instances, depending on the industry, I can do that today. And I'm not a coder. And that is it should be very worrisome for people who have replaceable jobs. It's not going to happen instantaneously, and it's not going to happen in every area, but it will start to happen more and more. And that means that the power that we need in order to back that up is absolutely astronomical. And I think it will be a determinant factor of this race of, which company is going to dominate the arena. I think they know that energy is going to be, one of the dominating factors, because they say that when you input a little prompt in ChatGPT, that takes 10 times the power that it would take Google to provide the same answer. And that's just the chatbot. That's not everything else that's coming. So yeah, I'm excited about that. Was not in anybody's model until, maybe a year ago max. And now we're looking at something even more interesting. So I'm very bullish all forms of energy going into the next decade.
Yeah, I think it was really at this event about a year ago when I started hearing all these AI rumblings, and I appreciate you saying it's not just these chatbots, because I'm totally guilty of thinking, oh, another one of those, all right, but it's so much more than that. So good to go into that. And so we've been talking about the demand side for uranium, but I think also important to take a look at supply. So interesting things going on with supply as demand is increasing. We're seeing major producers struggling to ramp up, or with existing mines, geopolitical snags. Are utilities, do you think, getting worried? What would you say about supply right now?
So utilities are worried in the sense that they need to be concerned about the end of the cycle, right? So they need fuel in order to power their plants, and it needs to be in, fabricated fuel as the very last step. And as long as they have that short term, they're okay. What's happened in the last, few years is that let's pretend they keep a cupboard of uranium. It can't exactly be like that for safety reasons, but let's say they keep a cupboard, and maybe they used to keep 6 years worth, 5 years worth of uranium, and they would take that uranium and put it into the next step of production, take it back, put it into the next step of production until they were able to get the little pellets that they can actually use. And so that takes, 18, 24 months. And what's happening now is that they focused on buying up the fabricated fuel, and then the gas and everything that comes after the uranium in the production timeline. And they told themselves, it's okay if we hold 2 years worth of stock in our cupboards and just take care of everything else that's shorter to midterm. And the time will come when they're going to look at the cupboards and they're going to think, oh shoot, we need to act now. And it seems like the longer they take, the more that they're going to have to pile on, and fight for the same pounds, which will likely, that's the thesis, that the price might explode to the upside if they do that in a not so elegant manner. And if they do it in an elegant manner, it will still go up because they still have a profile of more demand going forward. And that's what it's looking like. So that's part of the reason why the price has been, sideways to an extent. But at the same time, yeah, they have a very clear-cut plan, and that is to make sure that the plants have fuel that is sourced from ethical places in a timely manner, and that it's secure. And if the price is right, that's good. But the price is not the only thing that they're looking for, and that's, I think, our opportunity.
Right. And we already talked about some of the problems with the spot price and following it so closely. But I will ask, where do you think it is going this year?
I don't know, because I was really wrong last year. I thought it was gonna pop last year a lot, and I want to give credit to Lobel Tigre. So yeah, he was completely right in that it would correct, and then it would be a while until we got back to the 105, 107 highs, and he was completely right. And we're down to 70-ish something. I don't know what's going to be the thing that brings utilities back to the table, but what's happening in the long-term market is super interesting in that pounds are getting contracted, and the supply, like you asked this just a second ago, the supply that people would have modeled, analysts would have modeled maybe 5 years ago, I would guess, I'm just spitballing here, I'm just guessing that maybe 50% of what was supposed to be online in the next couple of years is not going to happen, or at least not going to happen in the next couple of years. So you have to take that into consideration, that there is less and less of it. But there are more financial players in this trade as well. So sometimes you have traders buying and selling, hedge funds buying and selling, Goldman Sachs, JP Morgan, and financial players of all sizes playing in the market, in the spot market, and trying to take a guess on when it's going up, when it's going down. So it becomes very complicated, and it makes it a lot harder for the utilities, because imagine you absolutely need to buy your uranium. There is nothing else you can put into your plant. You can't put copper in. It's not like other metals that you can trade. You can switch back and forth between like platinum, palladium. And you are competing to buy pounds with JP Morgan and Goldman Sachs. They want their profits, and you need your pounds, so you're going to pay whatever it takes. And so that's the play here. I don't know, but I would love to see it break our old highs of 107 this year. I don't know how it would not. Honestly, that's my take. I think we touch there, and we probably break through that this year.
Yeah, that sounds like a pretty fair statement, I think, based on...
Conservative.
Based on everything you've laid out. Okay, so I think that gives us a good idea of what's going on in uranium and your thoughts, and I always love to hear from you about uranium. But I will ask, before I let you go, any other commodities or markets that you're watching right now heading forward into this year?
I always love everything else that everybody else loves: copper, gold, silver, you name it. I'm not into the lithiums and other different things. I just don't understand the market in particular. But gold is pretty fluid and pretty obvious. Same with copper, very linked to the economy, and silver, following gold. So I really like all of them. I think that if you look at anything else in 2024 and you compare it to crypto, the S&P 500 and everything else, I think the amount of love that serious projects in this business have received versus what they're achieving and advancing is just a disgrace. It's very, very little. And that's it feels like the calm before the storm, but I was actually mentioning this in my talk. There is the quiet, and then there's the awkward quiet, which is, I think, where we are right now, which is like we have talked about things being quiet for so long that it gets awkward. It's like, here we are again talking about how things are going to get better this year, right? And when you don't want to do that anymore, that's why I didn't talk about uranium in my talk. I'm like, hey guys, I'm the uranium person and I'm not going to talk about uranium. This should tell you something and they may present an opportunity. So this is what I'm going to tell your viewers. I'm not talking about uranium in this particular talk, and this should signal something. It was when a very famous silver person stopped talking about silver that I knew it was going to go up, and that's exactly what happened. So yeah, sentiment matters.
Yeah, I think that's a very good way to sum it up. And I had that moment myself with one of my coworkers today, that awkward moment of, okay, we're here again. It looks very familiar. So I think that's a great point to wrap it up on and just leave people to sit with that. Did you have any final things you would end with?
This is it. Just basically know thyself and make sure that your investments are not somebody else's ideas and somebody else's convictions. Just make sure that you know what you're buying to a certain extent. You can't know everything that goes on behind the scenes, but make sure that you're happy with what you hold. And the moment that you ask yourself, would you buy this again today? And the answer is no. And I'm preaching to myself, by the way, so this is why I'm saying this, then it's time to sell.
Okay. All right. We'll leave it there. Really good to have you back. And yeah, have a good rest of your show.
Thank you so much.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. And this is Fabi Lara with the next big rush. Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.